Welcome to the Tepper School of Business Multimedia Series. For more information on the Tepper School at Carnegie Mellon, please visit us at www.tepper.cmu.edu/multimedia. And now, here's your selected video.
Thank you, Anchor. Appreciate it. Okay, let's just get this straight. You're just here for the lunch, aren't you? Let me just start out by saying thank you, certainly to the faculty here at Carnegie Mellon. Carolyn, thanks for the hospitality. Professor Apt. He and I go a long way back on the Electric Power Research Institute board, and he's one of the most thoughtful leaders on the board that we have. And the other thoughtful leader, Ernie Moniz, is now heading up the Department of Energy. But we're just very thankful for all the work that's done from a research standpoint, but also it challenges our thinking in the electric utility industry. Too many times we get caught up in the day-to-day activities of what we're doing with, and we don't think about the big picture, and people like Jay on that board certainly help us think about the big picture. And Dean, thank you for allowing us to attend as well. So I want to start out by saying this has been a sort of a transformational time in our industry. And I really want this to be interactive because I'll probably speak for 20, 25 minutes, but stop me at any point and ask a question if you'd like, and then we'll have time for questions afterwards, because I really do want to hear what you think and what you hear. You know, too many times I really see a difference between the policy side and what we're experiencing in the real world, and I wanted to give you at least a lasting impression of what we experience in the real world. When it comes to energy policy in this country, it is changing. It's changing dramatically. You hear the president talk a lot about an all-the-above strategy. That all-the-above strategy, though, is limited in many ways. If you see what his administration is doing, I think it's important for this country to have a balanced energy policy that makes sense. I've really made that transition from all the above because it means different things to different people. Some people it means, all renewables. Some people it means all fossil fuels. And we're actually somewhere in between. From my industry and the company that I work for, it's clear that we have to make a decision on a risk-balanced portfolio management style through all the changes that are occurring in this industry. With the shale gas activity, with the changes from a technological perspective relative to energy efficiency, smart grid activities, those are critical for us to take a look at before making these huge investments that we make in our industry. Our industry, over the next decade and a half, needs to spend $2 trillion just on refurbishment of the existing grid and the addition of new generation. Now, when you think about it, 30 years ago when I started in this industry, most utilities were AA rated from a credit standpoint. Today, they're BBB rated. And it means something completely different when you talk about these huge capital investments to be made and the lagging effect from a regulatory recovery perspective in concert with what actually is going to get approved or not approved. And we have to be in lockstep with our customers, with our regulators, with our legislators, and other stakeholders to make sure that we are spending on the right things. So for our industry, and I don't know if many of you know about American Electric Power, we serve 11 states from a retail jurisdictional perspective. We also have retail operations in other states as well, but our main transmission, distribution, and generation fully integrated areas are in those 11 states, from the Mexican border up to Canada, mainly the south central part, Arkansas, Louisiana, Texas, and Oklahoma, and then our eastern footprint, what we call our eastern footprint, is actually the Midwest. But it's Ohio, Michigan, Indiana, Kentucky, Tennessee, West Virginia, Virginia. So those territories. So we have a broad territory to serve. We're also the largest transmission operator in the country. We operate the highest 765 kV transmission system in the Eastern Interconnect. We serve in 3 different reliability councils. So we have a taste of all three of those. Electric Reliability Council of Texas, ERCOT. Texas operates separately from the rest of the country. And then we also operate in the Southwest Power Pool and in the PJM area, which we operate in here. So those are areas that have different needs, different resources, different requirements, different market structures that are in place. And we operate in those market structures. And I think probably one of the biggest issues for us as a utility is to continue to develop infrastructure and also invest in the right kind of resources to accommodate within this structural morass that we have among the states that we operate in. So it is challenging, but at the same time, it's exhilarating because there's no better time to operate, to be in the industry that we're in than today. During my career, which is, I hate to say, it'll be 31 years in June, it has been a changing environment all along the way, but at no time has it changed like it has today. You're going to experience many things. If you're involved with energy, if you're involved with electricity, too many times we're viewed as the staid old industry. And nothing changes very much. Well, I can tell you it's changing across the board. We not only have resources, classic resources of fossil fuels, of renewables, of energy efficiency, of those types of resources that are changing, but on the other side, the customer needs are changing. The customers are changing dramatically in terms of their usage patterns, and we have to be responsive to both. So we're very focused on a lot of different technologies, and I was happy to go through the process today of talking to some of your professors and the projects that you're working on. When you're working on the integration of renewables into the grid, what variability means to our system, when you're talking about some of the other areas like battery technologies, those are critical areas for the future growth of our industry. And when we look at transmission, AEP is very focused on development of transmission to optimize the grid so that we can utilize the resources in the most efficient manner that we can. And that's something AEP has been committed to for a long period of time. Our company's been around for 106 years. We have been involved with many firsts in the industry, and many of them you may not think that we would be the first. It's a surprising thing that we actually supported Waxman-Markey, the legislation around greenhouse gas emissions that was proposed back in 2007 before the economy tanked. As probably the major coal operator in this hemisphere, we consumed at that point in time about 80 million tons of coal a year. It was hard to imagine that we would be supportive of Waxman-Markey. But the fact of the matter is you have to listen to what your stakeholders and customers are saying. Today we're about 65% capacity on coal. We're moving less to that, more to natural gas. We're seeing the advent of shale gas activity, which you've seen obviously in Pennsylvania. We're seeing it in Ohio, certainly have seen it in our south central states that we serve. That's clearly an area where this country needs to take advantage of. I'm a firm believer of having a balanced energy policy that focuses on all our indigenous resources and takes the risk from an American standpoint to make sure we have consistency in our pricing for electricity supply. Because there is nothing more aggressive than the electric utility system in terms of its pricing mechanism. The poor and middle class get disproportionately impacted by increases in electricity pricing, and we need to be very cognizant of that. I think policymakers in Washington tend not to understand that until we really do understand what those changes mean. Classic example is renewable portfolio standards. And certainly those are areas where we'd like to make some progress at. AEP has 2,000 megawatts of wind. We have a solar project in Ohio, believe it or not. We actually have a solar mandate in Ohio, believe it or not. But nevertheless, it's those kinds of things we have to continue to advance the technology and have to continue to decarbonize our resources. And we're very focused on that. We had the first carbon capture and storage project, fully integrated capture and storage project in the world in our West Virginia territory at our Mountaineer Station. It was a 25 megawatt electric project that actually separated the carbon from the flue gas on a retrofit unit and injected it about 2 miles below the surface in a saline aquifer. Now, that says a lot of things to different people. Many people think that's in the water supply. It's not. It's well below the cap rock, well below water table, and we successfully injected in those areas. But an interesting thing from a policy standpoint, we stopped doing it. And the reason why we stopped doing it is because the regulators wouldn't pay for it. We spent $100 million on that project, and our shareholders wound up paying for it because our regulators are already stomaching a lot of investment, and our rates have gone up considerably as a result of the investment in infrastructure, the investment in scrubbers and selective catalytic reduction devices and other things relative to coal plants, addition of new resources. So they're very hesitant to agree or approve something that isn't required by law at this point. And at that point in time, we thought Waxman-Markey was going to go through. We thought we needed to make certainly retrofit capability for existing capacity work, and we continue to progress that, albeit looking at different technologies. So those are the kinds of things that we're the first at. We also have a new patent coming out for transmission design. We have several other areas with battery technologies, the first to put sodium sulfide batteries in large scale in the country. So we're looking at all different types of resources. And it really questions what we call resources. In the past, it was central station, fossil fuel generation, and nuclear. Today, it includes energy efficiency, smart grid activities, optimization of the grid. Those types of activities are very much a part of the portfolio that we should be looking at. We view transmission as a resource. Transmission is clearly an area where we can focus on optimization of the grid and not have to build as many resources, but also address many of the coal retirements that are coming about. And by 2015, we'll be retiring about 7,000 megawatts of coal-fired generation. This is the older, subcritical, 200 megawatt variety, but also with the cumulative impact of the EPA rules that have come into place, we have an 800 megawatt unit we're retiring as well instead of putting a scrubber on those units. So it's with a combination of what the EPA has done with the cumulative impact of the rules, along with the advent of the shale gas activity, our capital is moving toward shale gas, energy efficiency, renewables. That's what you're going to see in the future from a capacity standpoint, probably over the next decade and a half to 2 decades for us. Maybe a nuclear uprate. We have a nuclear station as well. For those of you who don't know, nuclear is different. You have to treat it differently. The requirements around nuclear are much more stringent, and it's something that has to be taken very seriously, and we do that. But you have post-Fukushima there issues associated with new nuclear, and we're going to have to find a mechanism for long-term storage for new nuclear before it really moves on. Right now, there are a few 4 nuclear units being built, mainly in the southeast part of the country, and they have legislative and regulatory support to do that. No way would you look at building an $8 billion nuclear station our market cap is $23 billion, and to take that kind of risk, you better have some kind of response to mitigate that risk, and certainly Southern Companies has done that in the Southeast with the Georgia Commission. So many things are changing from our perspective. It's a great time to be in this industry. You can actually change the world, you can change the thinking, you can change the energy policy in this country by being a part of this industry. We are heavily involved with the development of energy policy in Washington. Many people ask, do you have a lot of legislative regulatory relationships? Yes, we do. We're heavily regulated. In many cases, with I visit the governors, I visit the senators, I visit the president and others, and it's important for us to have that kind of dialogue. Matter of fact, it was just a couple of weeks ago that I was with 13 other CEOs in the Situation Room in the White House talking to the president about cybersecurity. Cybersecurity is a big issue in our industry today. Not only are we viewing critical infrastructure as those areas where we have to protect, not only from a physical standpoint, but also from a computer standpoint as well. And that's important for us to make sure that we have that kind of talent in place. A few years ago, didn't have any cybersecurity professionals. Today, I have a whole floor in our One Riverside Plaza corporate headquarters focused on cybersecurity. And you'd be amazed at the encroachments that we get every single day. And many people believe it's just the banking industry, but ours is much more complex because it's not only the system infrastructure itself and the customer information, those types of activities, but it's also the physical systems as well. And a lot of work's being done in that area. So in my mind, the biggest issue today is the economy. I think for those of you who have graduated and worked other places, you know this, and those who are about to graduate will find out that half the graduates don't have jobs, and at least jobs that they actually prepared for. And that's something I think that's critical for development in this country to get industry and manufacturing going again. We see in our industry, we're actually a microcosm of the country. We're a third industrial and manufacturing, a third commercial, which is the supply type relationships, the KFCs and all that kind of stuff, and then the residential customers. And we see the economy is tenuous at best at this point. We estimate a 0.5% increase in load for this coming year. We've seen the industrial sector continue to drag. And it's going to continue to drag until there's policies out of Washington that are conducive for that consistency in investment. We have a 3.6 billion capital budget, it moves to 3.9 next year. In order to put the capital to work, you've got to have sound rules, sound processes in place to invest that kind of capital on a long-term basis. And right now, with the vacillations going on and how the two parties have taken things to the extreme and run to the cliff before anything's done, it's very difficult to make investment decisions. It's also, with all the changing technologies, it's difficult for us from a resource standpoint to decide which investments to make from a resource area, whether it be fossil generation, renewables, or so forth. And it's dependent upon what each individual jurisdiction believes. Each part of the company thinks differently about what the resources ought to look like. And we're trying to address that through what we call an operating company model. In the past, we built resources for multiple jurisdictions. Today, it's the jurisdictions that decide what resources are built, the state jurisdictions. So it is, for this industry, I think the biggest part is the economy. We need the economy to come back because when I talked earlier about $2 trillion of capital investment to be made, it's very difficult to do that in an environment where that denominator is not growing. And that's what's happening today. So our business is becoming one of optimization rather than deciding where the next central station generation is going to get built. And it's a very different industry. We're putting together a competitive business model. We have a wholesale trading operation that trades electricity. There's a lot of optimization around risk associated with that. So when you look at our industry, it's not just the utility piece of the business, it's the trading piece, it's the cybersecurity piece, it's the investment, the creative investing that occurs that's really driving the way our business operates in the future. So clearly there's an opportunity for each and every one of you in this business. And then if it's not the electric utility industry business, it certainly is the energy business as a whole. It's just a dramatic change that's occurring. Well, I'll open up for questions now. I've been rambling on for so long. I don't know how long I went, but...
necessarily be the best place to put more? Do you think there would be effort for that sort of, I don't know, incentive package for renewables?
Yeah, it'd be great if we could optimize the grid and plan it like we used to plan it. But there's so many participants, there's so many fractured pieces of the business. It's very difficult to plan the system at this point. I think at this point, you're not going to see that. You're going to see renewables being placed wherever they can be placed. And our response will be that we'll have to make sure the transmission infrastructure is there to support it. The generation side of things is also operating as a separate part of the business, and that's even more difficult because people are making their own investment decisions around where generation goes and not even checking into the transmission aspects of it. So I don't think any of that's going to happen until there's an actual shortage of some kind. And it's an odd reality, but we've been blessed by the economy being such a drag right now because there's plenty of capacity available. When we retire capacity based on the EPA regulations, and which will be 2015, and the economy comes back, we're going to have a lot of optimization decisions to make just like that. No question. Yeah.
How risk averse are the decision-making processes at AEP? Do you tend to look at the expected value, or do you have to worry about the tails, the low probability of not being able to serve your customers?
Yeah, it's sort of interesting. We have to look at loss of load probability for all the investment decisions that we make. We also have to be mindful of what actually is recoverable. And there's a big issue with how far ahead from a research perspective, certainly from going out on a limb with new types of technologies, what effect that has with the regulator. The regulator has different views. Just like with the carbon capture and storage project, they didn't pay for it. But AEP has a history of being the first in a lot of different areas. The first supercritical in this country, the first ultra supercritical plant in this country, the first 765, and just go on and on and on. And I think that's more internally driven for us. We pride ourselves in making those advances, but it also drives a different contract management style. We are integrally involved with the projects that we do, where we understand them, where we manage them, and then if we fall flat on our face and not recover it, then it's our problem. And luckily we haven't had much of that. I can tell you, we did have other than the carbon capture and storage, we did have a scrubber issue, a new type of scrubber that we put in place. And it had its challenges. We fixed it along the way, but commissions typically don't give you much leniency in terms of the recovery aspects. But we our style toward what we invest in is changing dramatically. We're trying to minimize the risk of the generation investment, and we're willing to maximize the risk associated with transmission, distribution, and distributed resources and so forth, because it's important for us to advance that part of the portfolio in our mind. So it really is dependent on where we're at the time. But I'd say we're probably more willing to take on risk than our commissions are willing for us to take. But that's all a part of getting out ahead with the regulator and explaining to them why we're doing what we're doing and why it's important to do what we do. Because if there's a big difference between bench scale type of technology and actually putting it in commercial scale operation. And that's the kind of risk that we take on that regulators by and large have supported us doing. We just have to have the right message and have it clear enough. Yeah.
Can you talk more about the numbers for the sequestration project, like what percent of carbon they will capture, what the cost would be of capture, how much they will put in the ground?
Yeah, so it was a 25 megawatt project. It's a that particular unit is a 800 megawatt unit. So roughly maybe 1-2%, maybe 3% of the carbon actually emitted, and we captured that because it started out as a 1.8 megawatt deal at actually at Wisconsin Energy, and then we took it and expanded it to around 25 megawatts electric, and then we were going to scale it up to 235 megawatts, which would have been the commercial scale. So we captured roughly over 100,000 tons of carbon and CO2 and compressed it to a supercritical fluid, injected it 2 miles below the surface. And the parasitic load, we really didn't do any analysis of the parasitic load because it was an expansion project, but the parasitic load typically for these types of projects run on the order of 25% to 30%. So you can think about it, if you did it for full scale, if you had a 450 megawatt unit, at the end of the day you have a 300 megawatt unit, that's not a good outcome. And that's what you're faced with from the technology side at this point. And then as far as actually it was a ammonia type of use, and it captured about over 90% of the CO2. The capture rate was over 90%, so it was very successful in that regard. And that's one key about removing CO2 from coal. Removing CO2 from coal is easier than removing CO2 from natural gas, because natural gas has more liquids and water in it. So it's I think it was a good thing to do. The question now becomes, how do we minimize the parasitic load, and then how do we limit the cost of putting it in place? And I've been watching closely the chemical looping technology at this point. We're testing it now at the Wilsonville facility and at DOE in Alabama, and that seems to be promising. So that's probably some of the next steps to take a look at. Yeah.
Does AEP have a position on the export of natural gas?
Yeah, I think we should allow exports of LNG. Well, that's where I've always said we'd allow the exports enough to let the boat rise to where it doesn't have an impact on our manufacturing and industrials. So now the manufacturing industrials will say don't allow it. But here's the major point that I look at. Right now the price is so low that nothing else is getting done. So we need the price to raise up for natural gas somewhat to allow not only for more drilling of natural gas, but also for the other resources, renewables, as well as coal, as well as nuclear, to re-enter the mix. Right now, that's not going to happen. The other factor is obviously LNG exports will increase taxes and revenue for the country and all that kind of stuff, which would be beneficial, and the job creation associated with it. We've benefited in our service territory. The saving grace for us has been the oil and gas activity because of the shale gas issues that we've seen across our territory. It's important to continue that, develop that indigenous resource, but make it complementary to the others. I believe, though, that you could allow LNG exports, and because of, these facilities cost billions to build. And then you have the transportation of LNG on top of that. So you have to think about it from the end solution, not from the export from the U.S. You've got to think about delivered cost. And that's going to temper the amount of LNG exports that occurs. So it's a matter of whether it's limited somewhat or you let it go and see what happens. Keep in mind too that natural gas prices can increase to $7 an MMBTU, because of the conversion of new technologies of natural gas, you have new combined cycles that are on the order of 5,800 to 6,000 BTU per kilowatt hour. So if you have that kind of heat rate conversion relative to a $7 price, you're still at 4.2 cents a kilowatt hour. And that's competitive with some designer coals. So there's no reason not to advance that picture.
Yeah. You seem somewhat skeptical that new transmission will be built. Do you think that AEP will be able to meet its renewable portfolio standards? And if so, will it be at a higher cost than originally envisioned?
Well, I'm not skeptical about transmission. I'm skeptical about the long interstate projects and getting them done in a timely fashion. You know, I think we changed our mechanism to where we focus on shorter projects, a lot more of them. We put transcos in each one of our jurisdictions that are FERC regulated so that we can invest and build transmission. Our transmission investment, I know just in the last year, our transco investment is almost doubled from $460 million to almost $900 million, and it's been a dramatic change when we focus on those types of projects can actually get done versus these longer term projects that are very difficult to do. Now, before I get to the renewable portfolio standards, and remind me to come back to that if I get off track here. But I just want to give you an indication of where the U.S. has come, and I talked to the group earlier about this. We built, and I forgot about the 2 years, so I'm correcting myself. It took 16 years to build the last 765 kV line that we built. 2 years to actually construct, and 14 to get permitted. And in the U.S., that's what's happened. It's become such a litigious society that anyone can come in and know they can just stop a project from happening and it'll kill it. That project got done. We had the patience to last around for 14 years. But nevertheless, it's those kinds of things that have to change along the way. And for renewables, we'll meet our renewable portfolio standard requirement. We already have 2,000 megawatts of wind. We purchase a lot of that. And then we also have our solar and biomass and other things that we're doing. I think it'll start to become a challenge, though, if our policymakers continue to, they're playing off against each other. I mean, each state comes out and says, I'm going to do 15% by 2020, and then the next politician will come out and say, well, I'll do 20%, by 2020. And then you got California gets up to 33%. And I told the group earlier, I was with lunch with Schwarzenegger, and he was touting, we're moving to 30-something% renewable mandate in California. Well, first of all, if you're paying 25 cents a kilowatt hour, you can afford to do that. Well, actually, you can argue that because California's bankrupt. But nevertheless, if you do all that, you have to think about the system itself as well and how the system operates. They're having trouble out there with the dynamics of having that kind of renewable connectivity to the system. So you have to think about those things as you go along. And just to put it in context, the average rate our customers pay is around 10 cents a kilowatt hour. So when you're adding wind and solar and other types of activities like that, you have to be mindful of what the impact it's going to do relative to rates. So it's a challenge. Not that I'm against renewables. I'm not saying that at all. I'm just saying it has its place. And actually, we've got some pretty advantageous renewable projects if the capacity factors are right. For wind power, if you get 35-40% capacity factor where the wind's actually blowing, that could be a benefit. And I told the group earlier we have a solar requirement in Ohio, which that makes a lot of sense as well. Yeah. I'll come back.
from throughout the engineering side, Central and Southwest and AEP, what are the biggest hurdles you face, and the biggest skills that serve you best in the engineering side along your career path?
I think I started out in system operations as an electrical engineer. My undergraduate was in computers, and which computer is probably technology that none of you probably even know. It's the old trash 80s and stuff like that, but probably don't even know that. But anyway, and my graduate was in power applications, computer applications to power, load flow, security studies, state estimation, those kinds of things. So the first thing I did out of college was focused on an energy management system that was being put together. We had generation and transmission together, operating together. And it was an opportunity to learn the system and learn how the system operates. And there's value in that, because any kind of policy discussion you get into, you understand how the system operates. Now, and I'll give you an example, a perfect example. It was at Columbia University about 2.5 years ago, before the HAP-SMACT rule by the EPA was put out. I was in a panel with Gina McCarthy, who's now administrator of the EPA. And I told her, you know, what she was doing and what she was proposing with HAP-SMACT was going to eliminate a bunch of generation in this country, and you couldn't do it at one time. There'd be reliability issues associated with that. So what did the EPA do? They did the rules anyway. We were the first out of the block saying that there would be 60,000 megawatts retired as a result. The EPA was saying there'd be 10,000 megawatts. And sure enough, now we know the numbers between 60 and 70,000 megawatts are being retired. And they're retired because not only of the cumulative impact of the EPA rules, but also, you know, making decisions relative to natural gas going forward. But that aside, knowing how the system operates, I told her there'd be reliability conditions in certain parts of the country that couldn't get done in the amount of time they were talking about. Well, sure enough, now the DOE and EPA are working together to try to figure out how to form a mechanism to where we can keep those units on for longer. So it's those kinds of things that you sort of have an intuitive feel about that helps all along the way. I think having, you know, an engineering education along with a business education is a great combination. I went the technical route with a master's in EE, but I did the side things because, and I think that's one thing for college students, to recognize your deficiencies. My deficiency was in the financial area, so as part of my plan, I moved over to mergers and acquisitions, learned about the industry, learned about the financial aspects, went to these management schools to focus on the financial aspects to eliminate the deficiencies. And I think that's what you do all along the way. When you get out of this place, and those of you who had jobs previously and came back, there's a reason why you came back. There was something else you wanted to know. You had another burning desire. And I think you have to have that kind of passion and desire for your entire career, because circumstances are changing, technology is changing, and you have to stay abreast. You can't get behind. And that's clearly something that you all need to take with you. Just my advice. Yeah.
So as technology changes, you see certainly various players, whether you're looking at oil, natural gas, etc. How do you navigate those industry relationships as you're looking at the Marcellus Shale Coalition, or everyone has their Washington players? How do you navigate those relationships?
Yeah, so we have a Washington staff as well, and they're every day out there working with legislative staffs, congressmen, and I spend an incredible amount of time in Washington, visiting congressmen, visiting the administration, because it's important for us to be engaged in that debate that's going on there. And many times you have conflicting interests. A lot of times you have the same interests. But like the oil and gas industry, You take that for example. I mean, they obviously want shale gas to be successful, and the majors are now stepping in to try to do something around the operational excellence around drilling. You know, they're coming up with arrangements with the environmental community and so forth to continue to be able to drill, but do it in an environmentally responsible manner. Early on, we see it in our industry as a big positive. We want shale gas to be successful because it's another tool in the toolbox for us to be able to supply resources to our customers. But you know, at first, the industry was saying, you know, we don't have to pay any attention to that. We're going to go on forward. And we were saying, no, you're like the nuclear industry. You know, the nuclear industry, you're only as good as your lowest common denominator. Anything that happens, whether it be Chernobyl or Fukushima or anywhere else, reflects on the entire industry. And if you're in the middle of a 7-10 year construction cycle during an event like that, it's a dramatic impact. So that's the importance of it. Same is true for the development of shale gas activity. They really do have to make sure there's operational excellence around the way that they drill so that it can endure as a resource for the future. Without it, it's going to come crumbling down, and that's not a good outcome for anybody. So we always navigate the most difficult part for us in the last 4 years, well, actually for any administration, is navigating between the Republicans and the Democrats. Because Republicans have certain expectations, and you know, you think that they're thinking together about what can be done for the country, but they're thinking about how to make each other look bad. And that's a challenge to get things done. Now, after the election, I know there's, you know, like I mentioned before, Senator Wyden and Senator Murkowski are getting together. They're both sides of the aisle, Republican and Democrat, working on energy policy. They're now starting to see that they do have to work together. Now, to what extent they can work together remains to be seen, but it's important for us to be able to navigate through that. And it's a very difficult proposition at this point.
Can you give an idea of the per kilowatt hour production costs of various types of renewables, as well as, you know, oil, gas, that kind of thing?
Yeah, with or without tax credits.
Without, but not counting above cities.
Okay.
Also, what's like the total economic impact on EPA regulations on
Okay, so the first part. Just to give you an idea, and this is where the rub comes in, because if you look at nuclear is the lowest cost, but you've got to look at it over 80 years. So if you're making an 80-year investment decision, nuclear looks pretty decent, okay? And it'll be around 7 cents a kilowatt hour. If you build a new coal unit, that's a total cost. If you build a coal unit, it'll be on the order of around 7 to 8 cents a kilowatt hour. So it's right on top of nuclear. And wind is about 10 cents a kilowatt hour. Solar is about 15 to 20 cents a kilowatt hour. It used to be 25. I think it's come down quite a bit. So, and those are really sort of the relative measures. Natural gas now, with natural gas pricing, is probably, it depends on what your forecast is for natural gas if you're looking at over a certain horizon. But if you look at today, it's probably pretty comparable with nuclear and coal in the long term. But keep in mind, that's today you'd make a natural gas decision, because natural gas is probably going to be less than $7, you know, for the next 2 decades, and you'll also have less capital associated with it than you would with the other projects. So that's why natural gas, if you're going to build something new, it's natural gas.
We have time for one more question.
Yeah.
Hi, I'm Nick Alcama, first year MBA. We've heard a lot about the complicated technological environment, a complicated regulatory environment. But I mean, your company has been successful where a lot of your peers have not. What's one thing that you personally done as an executive to get that benefit, to be able to survive in this environment and be a success?
I think very definitely, as far as the company is concerned, it's been our move to the operating company model. Whereas in the past, we've been so convoluted, you couldn't figure us out. Even our investors were saying, we can't figure you out, you're too complicated. What we've done is put presidents of each operating company in place to focus on their particular set of commissioners, their particular jurisdictions, and to have capital allocation responsibility between generation, transmission, distribution for their particular areas. So it's given them the credibility with the regulator to have those discussions to ensure that we're able to recover from a regulatory standpoint. What we've done in the process is mitigate the risk. We've eliminated a lot of risk. We built the first ultra supercritical coal unit in this country. It went into place December 22nd. That's done, and moving into rates now. So that was a big area of risk for us. Another area of risk was Ohio is becoming an unregulated state from a resource generation perspective. So we now got a final order that sets the tone for the future in that regard. So clarity is particularly important from a regulatory standpoint. Those are elements of risk that we've taken out. We've got an agreement with the environmental community around scrubbers at one of our stations. There was $1 billion per scrubber, and there were 2 of them. So it's those kinds of things that we've done to mitigate risk, but also to clarify our business model going forward, that our investment decisions are made less on generation and more on infrastructure and transmission, and we're experiencing the growth of transmission. And our investors understand that story. So that's what I've done in the last year. I mean, I became CEO on November 12th of 2011, and it was right in the midst of all these risk areas. And for a first-year CEO to come into that process, even the regulators felt sorry for me, and but we got through it. And we're now at a point where we've set a firm benchmark for this company going forward with an earnings growth pattern that people understand and a focus on the strategy of the company that people understand. And that's what I've been focused on for the last year, and that's probably something that my entire management team has been focused on. We're now, this year, focused on culture. We can't have a change going forward for our company without changing our culture. And we're trying to move to more of an entrepreneurial type culture to focus on the activities and decisions that need to be made on behalf of our investors in the future, as opposed to being highly regulated, highly focused on areas that not taking any risk at all. And that's a transition that we're in. But it's been a good place for us. This company's been around for 106 years. It's one of the few companies that we're in our 411th quarter of paying a dividend, which continual investors want to see. And we continue to make very good progress, and our recent stock performance has been indicative of that. My report card is looking at that stock price every day. Matter of fact, I look at it more than once a day. Just after every speech, I look at it to make sure I hadn't said anything. My CFO and I were on our first trip, international investor trip, and we got through the investor presentation, and the stock dropped $2 a share. And we wondered, what the heck happened? We didn't say anything. And it turns out we didn't. Something else was occurring in the market, but it scared the heck out of us. We were off to a great start. But being a first-year CEO is it definitely is a life-changing experience. And the other thing I'll leave you with too is keep a sense of balance in your life. I'm a CEO, but I'm also interested in music and the arts, but also focused on other things as well. And you have to keep that sense of balance. That's something, particularly for engineers. Engineers really need to think about that. And the interpersonal skills, work on the interpersonal skills as well. Yeah. Thank you.